Hi, my name is Kishore Subramanian. I'm the founder and CEO of Shree Consultants. Shree Consultants was established 21 years ago in 2004. We are into the business of advising individuals and corporates on how to go about managing their money and investing their money. We are primarily a mutual fund distributor and we handle over 5,000 clients, handle over 600 to 700 crores of assets across different assets. And today, with pride, we can tell you that more than 98% of our clients are retained with us for over 9 years. We are proud and thankful to our clients for the support. And today, I'll try to answer a lot of doubts and clarification that one has related to investments and various other subjects. Okay, a 1 crore term insurance, is this enough? So this, to be very honest, the answer is very complex because it's very dependent. Now, let's say your annual income is 3 lakhs. A 1 crore sounds to be an adequate number. But if your annual income is 10 lakhs, then 1 crore sounds to be very less. So to avoid this confusion and to find out whether 1 crore is enough or not, the best way to do it is take your salary, see the number of years you have left to earn, multiply your salary by that number of years, add your liabilities, and then find out this is the minimum I would like to have as term policy. Let me give you an example. Let's say your age is 30, your annual salary is 10 lakhs, and you have a housing loan for 60 lakhs and a car loan for 10 lakhs. So what simply happens is with an annual income of 10 lakhs, you are 30, you need to have a 30 years covered, which is 3 crores, plus you need to have a 60 lakhs liability cover and a 10 lakhs. So basically 3.7 crores is what is required. But ideally, with your salary, you get a 20 times coverage or a 25 times coverage. So at least 2 to 2.5 crores in that sense would be an optimal number. If your spouse is earning, add that number to her depending on her income and you will get a fair coverage. So rather than asking will 1 crore be enough for 2045, do this mathematics of calculating your salary multiplied by at least 10, 15 or 20, add your liabilities and then take the cover depending on what you are offered by the insurance company. Okay, this is a very interesting question. Let me tell you why inflation is important, because most people don't understand inflation. Because inflation, they just assume that some numbers is going to go up and down. So I'm going to give you a very exciting data point which will stun you. Okay, in 1938, an average middle class family used to spend about 10 rupees a month. Okay, in 1958, 20 years later, that became 100 rupees a month. In 1978, another 20 years later, it became 1,000 rupees a month. That was the time my dad was earning, and I remember his salary was 772. Though I was a small kid, I've always asked him that his salary was about 772 rupees. In 1998, that's the time I went to my first job, the monthly expense of a middle class was now 10,000. In 2018, that's about 7 years back, the average monthly expense of a middle class family was 1 lakh. Now look at this pattern. 38, it started at 10, multiplied 10 times to 158, 1,000 in 78, 10,000 in 98 and 1 lakh in 2018. So when I sit down here in 2025 and tell you that 2038 it's going to be 10 lakhs a month, most of you are going to dismiss me saying, no, it's not going to happen, not possible. Had I told my dad in 78 that 40 years later, it's going to be 1 lakh a month, even he would not have assumed. So remember, inflation is a silent killer and the multiplying effect really piles up. Maybe the only thing that might change in the coming 20, 40 or 60 years is the rate of acceleration of inflation will not be that high. It will reduce. But if the monthly expense is 1 lakh, for example, in 2018, by 2038, mark my word, at least 5-6 lakhs. By 2058, it will be at least 50-60 lakhs. So if you are a 25-year-old and you live till 65, 70, 75, 80, 40 years later, the monthly expense will be 60-70 lakhs. So it's very important to understand that inflation can kill your returns or make you work till the last day of your life. So it's extremely important to be aware of inflation, calculate and be precise and understand and then take an adequate cover. Okay, the cool answer is there are no hidden clauses. Every single clause is written. It is just the responsibility of the insurance buyer to check it out, read it. Now, what most people do as a mistake is that there is a bulk document which runs into maybe 10, 15, 20 pages, sometimes 5 pages, and people are lazy not to read it. Don't do that. Try reading it. Today you have AI tools which can read and tell you the key clauses. The best way is select a consultant, ask him what you want to ask as a doubt, ask him to tell you the key advantages, ask him to tell you the key disadvantages, or just type on ChatGPT, Grok, Perplexity, any one of the AI tools and find out what are the clauses that you want to know. Or just ask a question, tell me in a term plan what are the advantages and disadvantages. It will throw everything. Upload a PDF document of your policy and read it, scan it and ask it to analyze. So there are no hidden clauses. Remember, after you buy a term policy, you can cancel it in 15 days. But why even do that headache? Just read it, understand it before you sign up. Okay, so how many years should I take my term policy? So there are multiple ways you can take your term policy. One, you can take it till your income earning capacity is there, most ideal way. Next, till you are alive, which is average expectancy of an Indian today is 75, 80. Third, take it till 100. Almost all of them are going to get into claims. If you take it till 100, you're sure for a claim. If you take it till 80, likely to be a claim. If you take it till 60, 58 or whatever your income age, you are covering adequately. And if you think you want your money back, take a policy where you get your refund of money too. So there are multiple options. Choose the one which suits you best. Absolutely not. A term policy in itself is a risk policy, which means you pay a premium. If something goes wrong, you get your money. In case nothing goes wrong and you survive, which is the highest likely probability because only 0.5 to 1% die, you're not going to get your money back. So remember one thing very, very, very clearly. The concept of term insurance or insurance as such is pool money to protect everybody. So all of us together pay money in order to protect each one of us, assuming that one or a few among the group will have an eventuality. So it's basically all of us contribute to protect all of us. Now, whoever is the unfortunate in the group will get the claim. Thank you. It was a pleasure talking. In case you want any support on this, click on the link below and my team will help you getting the right term insurance at the right price.